Warm greetings to all. I am Dr. Nirmala from Department of Commerce. I am going to take cost sheet in cost accounting. What is cost? Cost means actual expenditure incurred for manufacturing a product. It is the monetary value of goods and services that producers and consumers purchase. Cost is the expenditure required to create and sell products and services or to acquire assets. In other words, it is the amount paid to manufacture a product, to purchase inventory, to sell merchandise, or to get equipment ready to use in a business process. There are many different costs, including fixed and variable, but they are all accounted for in the same way. A cost sheet is a statement prepared at periodical intervals of time which accumulates all the elements of the cost associated with the product. It is used to compile the margin earned on a product or a job and form the basis for the setting of prices on similar products in the future. Business managers use cost sheets as a reference document to manage purchasing and production cost and to find out the right selling price for products and services. There are two types of cost sheet. One is historical cost sheet and next one is estimated cost sheet. A cost sheet is a statement that records all the cost a business incurs from production to sales. Using this information, a company can fix the price of its products and services. The main advantages of a cost sheet is that you can prepare it with the previous cost sheet to measure performance. You can then decide whether the cost of an item can be increased or decreased according to your cost. You can prepare a cost sheet using previous cost sheet or current estimated cost. A previous cost sheet shows you the actual cost incurred for producing, storing, and selling a product. Using estimated values, you can produce a cost sheet just before the production begins. However, there may be several changes in the estimate and the final figures. So the historical cost sheet considers the actual expenses incurred. Since this method is based on the actual cost incurred in the past, it is called historical cost sheet. It is most commonly used type of cost sheet in various manufacturing businesses. Now, next one is estimated cost sheet. The estimated cost sheet includes the selling price and future profits are determined by estimating the production cost of a product. Now, the estimated cost sheet are widely used in service industries and construction businesses, where contract revenue is determined based on the projected cost incurred. Estimated cost sheet can also be prepared before the start of a business based on accurate and correct data collected by the concerned department. Now, next slide. Cost sheet is a memorandum statement that provides the estimated detailed cost in respect of cost center. In a cost sheet, the elements of cost arranged under different heads following a logical order. It depicts the detailed cost of the total output for a certain given period. A cost sheet has to contain the following information. With the help of cost sheet, you are able to ascertain the total cost and the cost per unit for a product. And this cost sheet will focus four main components. One is prime cost, second one is work cost, third one is cost of production, and fourth one is total cost or cost of sales. This cost sheet will help us to find out the percentage of every expenditure to the total cost. Now, the manufacturer will be able to compare the cost of any two periods and ascertain the inefficiency. And this cost sheet is very useful to the management for making cost control and reduction of cost. Now, the next concept is elements of cost. The elements that constitute the cost of manufacture are known as the element of cost. Such element of cost are divided into three criteria. In a manufacturing concern, raw materials are converted into a finished product with the help of labor and other service units. They are material, labor, and expenses. Likewise, all indirect material, indirect labor, and indirect expenses are added to get overhead. Now, the first element is material cost. Under material cost, we have divided into two. One is direct material, second one is indirect material. Direct material refers to material out of which a product is to be produced or manufactured. For example, milk is the direct material of butter. Second one is indirect material. It refers to material required to produce a product but not directly and does not form a part of a finished product. For example, nails are used in the furniture. Now, second element is labor cost. Under labor, we have direct labor and indirect labor. In direct labor, it refers to the amount paid to the workers who are directly engaged in the production of goods. It varies directly with the product. For example, we are giving salary to painters, welders, and some staffs. Next one is indirect labor. It refers to the amount paid to the workers who are indirectly engaged in the production of goods. It does not vary directly with the output. For example, we are giving salary to production supervisor and quality control staff. The third element is expenses. That will be divided into two criteria. One is direct expenses and next one is indirect expenses. Now, direct expenses refer to the expenses that are specifically incurred by the company to produce a product. For example, carriage inward, factory lighting, coal, gas, water, and all. Next one is indirect expenses. It refers to the expenses that are incurred by the organization to produce a product, but these expenses cannot be easily found out accurately. For example, office expenses, telephone bills, powers are used for production. Now, overhead, it is the combination of all indirect material, indirect labor, and indirect expenses. Now, we have four components of cost. One is prime cost, second one is work cost, third one is cost of production, and fourth one is total cost. Now, first one is prime cost. Prime cost is the total direct cost of production, including raw material and labor. Indirect costs such as utilities, manager salaries, and delivery cost are not included in prime cost. Prime cost is the aggregate of direct material, direct labor, and direct expenses. It is also known as flat cost or first cost or direct cost. Now, how we will calculate the prime cost? Prime cost under this header, you have to record all the expenses involved in the production process. This is also known as basic or first cost. For example, if you have a textile store, your prime cost will be the cost of purchasing fabric from weavers, employee salaries, packaging, implements needed to measure and cut cloth. So the formula for calculating prime cost is you have to add direct material, direct labor, and direct expenses. Now we will do the problem. Problem number 1. Calculate prime cost from the following data. In this question, they mentioned raw material used 50,000, direct wages 40,000, direct expenses 10,000. Now we have to find out the prime cost. What is the formula for prime cost? Prime cost equal to direct material, add direct wages, add direct expenses. Then you will get a prime cost of rupees 1 lakh. Now, the next concept in the prime cost. In some question, they will not give the direct material. Instead of that, they will mention opening stock of raw material, purchase of raw material and closing stock of raw material. So here we have to find out cost of raw material consumed. So what we have to do here? We have to take opening stock of raw material and we have to add all the purchase expenses which is related to raw material, and we should deduct closing stock of raw material. Now we'll do the problem. Problem number 2. Calculate prime cost from the following data. Raw material purchase 80,000, sale of material scrap 1,000, opening stock of raw materials 12,000, closing stock of raw materials 21,000, direct wages 40,000, direct expenses 10,000. In this question, we don't have direct material, but they are giving opening stock of raw material, closing stock of raw material, and purchase of raw material. So what we have to do here? First, we have to enter opening stock of raw material, and then we should add purchase of raw material, and then we have to deduct sale of scrap and also closing stock of raw material. So finally, we will get cost of raw material consumed, rupees 70,000. And then direct wages, direct expenses of rupees 40,000 and 20,000. We have to add to get the prime cost of rupees 1,20,000. Now, the next concept is work cost or factory cost or manufacturing cost. Work cost is a sum of prime cost and overhead cost, including factory expenses. Overhead cost are those costs that are not directly related to the production of a product, but are required nevertheless. For example, you need to pay electricity bill to keep your production going. Similarly, there are several other taxes and utility costs that fall under the overhead cost category. So here, what we have to do, that is, after the prime cost, we have to add the factory overhead. Now, overheads are business costs that are related to the day-to-day running of the business. For example, a vehicle retail company pays a premium rent for business space in an area with additional space to accommodate a showroom. The premium rent is one of the overhead costs of the business. A business must pay its overhead cost on an ongoing basis, regardless of whether its product are selling or not. Now, what is overhead cost? An overhead cost is any necessary expenses needed to run the business. An overhead cost is any necessary expenses needed to run the business. While we cannot eliminate overhead entirely, you can reduce overhead cost. Now, under overhead, we have three criteria. One is fixed overhead cost. Second one is variable overhead cost. And third one is semi-variable overhead cost. First one, fixed overhead cost, remains the same from month to month. This category includes things like mortgage or rental payments and government fees. Now, second one, variable overhead cost will fluctuate along with your business activity. Things like legal expenses and shipping cost will be dependent on the daily operations. Now, third one, semi-variable overhead cost sit in the middle. They might come with a base rate that is fixed, but there is a variable rate on top of this determined by business activity. For example, vehicle usage. Now here we have to find out the work cost. So how do we calculate the work cost? So we already done the prime cost. So what we have to do, from the prime cost, we have to add factory overhead. Factory overhead means factory expenses, such as rent, electricity charges, indirect material expenses, other indirect wages, salaries of production aides or supervisors, other salaries, insurance and depreciation, which is related to factory, Then we will get work cost incurred. From this work cost incurred, we must add opening stock of work in progress, and then we have to deduct closing stock of work in progress. Then we will get work cost. Now next slide. Next concept, cost of production. Under this header, you should include all the expenses involved in business operations, including rent and work cost. The formula for calculating the cost of production is work cost plus administration overhead cost or office overhead cost. So from the work cost, we have to add office and administration overhead cost such as office rent, depreciation, general charges, audit fees, bank charges, other office expenses. Then we will get cost of production. And then we must add opening stock of finished goods and we should deduct closing stock of finished goods. Finally, we will get cost of goods sold. Now, next slide. So the next concept is we have to focus on total cost. So total cost or cost of sales. Now, cost of sales or total cost contains the details of all the expenses involved in the production and other costs involved in selling and distribution. This value will help you understand how much you spend on a product according to the resources used for producing it. You can decide your selling price according to the cost of sales and know how much profit you will earn from it. Now, here we have to find out the total cost. So from the cost of production, we have to add selling and distribution overhead such as commission, salary to sales, traveling expenses, advertisement, delivery expenses, sales tax, bad debts. Then we will get cost of sales. Then in the question, they will mention sales. So what we have to do here, we have to enter the sales amount as well as cost of sales. So we have to deduct from sales, right? So if it is a positive figure, then we should be termed as a profit. If it is a negative figure, then we will termed as a loss. Now we'll do the problem. So this is a format for preparing the cost sheet. So cost sheet as on the date, it will be in the question. So we have to write it here and we have to provide 3 columns. First column particulars, second column total cost, third column cost per unit. Now in the question itself, they will mention output or production units, right? Now, the first one is we have to enter opening stock of raw material. We have to add purchases and carriage inward. We must deduct closing stock of raw material and material returned to retail stores. Then you will get direct material consumed. Then after direct material consumed, you have to add direct labor or productive wages and direct expenses. Then we will get prime cost. Then after prime cost, what we have to do? We have to add factory overhead or works overhead or manufacturing expenses. And then we must add opening work in progress and we have to deduct closing work in progress as well as sale of salvage. Then we will get work cost or factory cost or manufacturing cost. Then after that, we have to add office and administration expenses or office overhead or administration overhead. Then we will get cost of production. Then after cost of production, we have to add opening stock of finished goods and we have to deduct closing stock of finished goods. Then we will get cost of goods sold. And then you have to add selling and distribution expenses or selling and distribution overhead. We will get cost of sales or total cost. And in the question itself, they will mention sales. So we have to write the sales amount in the last row. Then what we have to do? We have to deduct cost of sales from that sales. So if it is positive, then it is a profit. If it is a negative, then it is a loss. Now we'll do the problem. So how many overheads are there? 3 overheads. First one is factory overhead. Second one is office and administration overhead. And third one is selling and distribution overhead. So first we have to find out prime cost. And then we have to add office overhead. First we have to find out prime cost. Then we have to add factory overhead. And then we have to add office overhead. And then selling and distribution overhead. So finally, in the question, if we have a sales, then we have to find out the balancing figure, whether it is a profit or loss. Now, problem number 3. Preparation of cost sheet from the following information. The first one, inventories at the beginning. It means opening stock of raw material, opening stock of finished goods. Then second one, inventories at the end, closing stock of material, closing stock of finished goods. And we have purchase of raw material, and we have direct expenses, factory, office, selling, and productive wages, bad debts, discount allowed, goodwill written off, and then salaries, which is related to factory, office, and selling and distribution overhead, lighting, which is related to factory, office, and selling and distribution. And here we have factory insurance, office insurance, and then we have carriage inward, carriage outward, transfer fees, and sales. In this question, 3 items must be considered as a financial nature. What are they? Discount allowed, goodwill written off, and transfer fees. So these items will be considered as a financial nature, and we will not enter financial nature in the cost sheet. Now we'll do the problem. So first we have to find out the direct material or cost of raw material consumed. In the question, we don't have direct material. So we have to find out cost of raw material consumed. So what we have to do, we have to take opening stock of raw material, and then we should add purchase of raw material, carriage inward, and we have to deduct the closing stock of raw material. Then we will get cost of raw material consumed, 39,250. Then after that, we have to take productive wages or direct wages, and then direct expenses. Then the prime cost is 55,500. After prime cost, what we have to do? We have to add 3 overheads. The first overhead is factory overhead. That is, we should enter all the factory expenses. Then work manager salary, factory lighting, insurance. Then we will get factory cost. After that, we have to add administrative overhead or office overhead. That is office expenses, general manager salary, office lighting, insurance. Then we will get cost of production. Then after cost of production, what we have to do? We have to add opening stock of finished goods, and then we have to deduct closing stock of finished goods. Then we will get cost of goods sold, 2,05,200. From that, we have to add selling and distribution overhead. That is, we have to enter all the selling expenses and distribution expenses. Now, sales manager salary, lighting of showroom, carriage outward, bad debts. Then finally, we will get cost of sales, 2,66,850. Now, sales 3 lakh. So you have to deduct 2,66,850 from this 3 lakh. Then we will get a positive result, that is profit. Sales is 3 lakh. Then we have to deduct the cost of sales, 2,66,850. Then our profit is 33,150. Now, the next problem, problem number 4. Preparation of cost sheet from the following information. Here we have work in progress at the beginning. That is, beginning means opening one, right? Opening work in progress at prime cost, opening work in progress at manufacturing expenses. Next one, work in progress at the end. It means closing work in progress. So, closing work in progress at prime cost, closing work in progress at manufacturing expenses. Then here you have stock of raw materials, purchase of raw material, sales, expenses on purchase, manufacturing expenses, direct distribution, solution. First, what we have to do in the question, we don't have that material, right? Then we have to find out the cost of raw material consumed. So what we have to do, we have to take opening stock of raw material, you have to add purchase of raw material and expenses on purchase, and we have to deduct closing stock of raw material. Then we will get raw material consumed. Then we have to enter direct labor. Here we don't have a direct expenses, right? Then here we have opening work in progress at prime cost, then closing work in progress at prime cost. So usually what we will do, we will add all the opening items and we will deduct the closing items. Then we will get a prime cost of rupees 6,75,000. Now, after prime cost, what we have to do? We have to concentrate three overheads, right? What is the first one? Work overhead. Second one, office and administration overhead. What is the third one? Selling and distribution overhead. So first, here we have manufacturing expenses or factory expenses, 84,000. Then we have to add opening work in progress at work cost, and we have to deduct closing work in progress at work cost. Then we will get a work cost rupees 7,65,000. From this 7,65,000, what we have to do? We have to add administrative expenses or office overhead, right? 1,05,000. Then we will get cost of production rupees 8,70,000. What is the third overhead? Selling and distribution overhead or selling and distribution expenses of rupees 35,000. So we have to add this overhead. Then we will get cost of sales 9,05,000. And in the question, they mentioned sales of rupees 9,75,000. So what we have to do here, 9,75,000 minus 9,05,000, we will get a positive result of rupees 70,000. And this positive result we will be called as a profit. If it is a negative, then it should be the loss. Now, next slide. Preparation of statement of cost and profit. Prepare a statement of cost and profit from the following information. Here you have opening stock of raw material, purchase of raw materials, material returned to supplier, closing stock of raw material, and direct wages 20,000. In this question, we don't have works overhead, office overhead, selling and distribution overhead. Instead of that, they mentioned here we have to find out works overhead, office overhead, selling and distribution overhead with the help of the percentage. So works on cost, 25% on wages. It means that we have to find out works overhead on the basis of wages, right? From the wages, we have to find out 25% and that will be treated as a work cost. What is the second one? We have to find out the office overhead, right? So office overhead means from the work cost, we have to find out the 20%. Then it should be a office overhead. Then finally, selling on cost, 10% on work cost. Again, we have to find out 10% from the work cost. That will be our selling overhead. Finally, profit, that is 10% on cost of sales. So from the cost of sales, we have to find out 10%. So that will be treated as a profit. In this question, we don't have sales. So in this question, we have to find out the sales, right? Here we have a profit, right? Then we have to find out the sales. Now solution. Statement of cost and profit. First one, opening stock of raw material. You have to add purchases and you have to deduct the material you return to stores, right? That you have to deduct, and you have to deduct the closing stock of raw material. So we will get cost of material consumed of rupees 40,000. In this question, we don't have direct material. We have only opening stock, closing stock, purchases. So we have to calculate like that. Next one is We have direct wages. So direct wages of rupees 20,000. Then the prime cost is 60,000. After that, what we have to do? We have to add three overheads. What are they? First one is works overhead. Second one is office overhead. Third one is selling and distribution overhead. So first one, work overhead, 25% on wages. Here the wages amount is 20,000 into 25%, you will get 5,000. That is your works overhead. Then we will get work cost of rupees 65,000. After that, we have to add office overhead. That is, here we have to find out office overhead on the basis of work cost. So work cost is 65,000 into 20%. Then we will get 13,000. That is office overhead. Then cost of production is 78,000. After that, we have to add selling overhead. Selling overhead is 10% on work cost. So work cost is 65,000 into 10%, 6,500. So cost of sales is 84,500. Now in the question itself, they mention profit on cost is 10%. So from the cost of sales, we have to find out 10% for profit. That is 8,450. Then in the question, I already told you we don't have sales. Here we have to find out the sales. How we will do that? Cost of sales plus profit, we will get a sales of rupees 92,950. Thank you, students.